Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be on the show again.
And how is your new version of the book doing?
Well, it's too early to tell, but I have a couple of invitations to speak before large groups, one in Toronto, and so that could give it a lot of attention. And there's some really controversial new chapters that I've added to the second edition. For instance, the explanation of how it's not actually central banks that print money to create the money supply. It's actually the commercial banks, the private banks that are responsible for more than 90% of all the money that's created in the world. And so therefore, if the private banks, the commercial banks, are in love with lending against real estate, then that's going to be where most of the investment goes, because most investments is financed in most parts of the world by borrowing from the bank rather than from, savings or something like that. So the money supply is growing because the banks are lending, and the banks are lending to real estate, and therefore the real estate prices are rising because that's what the banks are willing to lend for people to buy. And it creates an imbalance, which is one of the main themes of the new edition. And it's going to be interesting and to see how it gets rebalanced again back to more productive types of investments in society, because really, flipping back real estate for higher and higher prices is not really creating any new productive investment in society. It would be more categorized as speculation. So now, if the commercial bankers were listening, they would say, "Oh no, we don't finance speculation," because they don't view real estate as a speculation. They view it as a long-term investment. But we're going to see about that. If you get far enough down the road where most people are putting an excess amount of money into one asset, it becomes a speculation rather than an investment, and that's, I think, where we are with the amount of money that's been lent. And by the way, it's not just a Canadian phenomenon, although Canada's one of the most extreme bubbles in the world, along with Australia. The trend has been the same for the last 50 years in most countries, not all countries in the world. China, Hong Kong, all over the world, you've got the same thing. And so the question then becomes, should we just leave it up to the commercial banks as to where they're going to allocate this precious new money that they're printing? Or do we direct them to more productive uses? And that I don't have the answer for that in the book, but I do raise the question and explore it a little bit.
Well, the Bank of Canada is just made up of Canada's biggest banks, so it's absolutely true. The Bank of Canada is basically a board of directors. It's not a real bank.
No, it doesn't do any lending as such. It's a little different in different countries. Like the Bank of England started out as a private bank, and the Federal Reserve Bank of the U.S., which is not only the monetary authority, but now it's also the regulator of the banks, is dominated by private bankers. The government appoints a few of the very top people, like Alan Greenspan and Ben Bernanke and Janet Yellen and the new guy Powell. But most of the directors of the Federal Reserve are actually appointed by the private banking sector. So of course they're going to want to have their friends in there, and so it's a very interesting history. I mean, it would be a whole book on its own or two books, but we've gone far down this road, and very far down this road. And the problem is, once the money is printed by the act of lending, it's difficult to it's difficult for the economy to adjust if the pace of printing slows down. For instance, if with the new guidelines in Canada, the B20 guidelines and the tightening of the CMHC rules and all the changes that you and I have talked about over the last couple of years, if cumulatively all of those things slow the rate of lending from, say, 7% per year growth down to 2 or 3% per year growth, that means there's 4 or 5% less new money being printed every year, and that could have profound implications for the economy, and it could easily trigger a recession. And so it's not clear how that gets reeled back in. Once you let the line out, it's really a challenge. I don't think anybody's got the answer as to how you kind of pull that back in, because when people repay loans to the commercial banks faster than new loans are being created, that actually shrinks the total amount of money in the system. And the way to think about money is think about it as deposits at the bank, which are mostly created when the bank makes a loan. And so if there's fewer loans being made, then deposits in the bank are shrinking, and of course that's going to start showing up as a problem for some businesses or some people. Now, there's other ways to create new money in the system, although the commercial banks are the main factor. The big other one is the government can spend more money than it takes out of money out of the economy in taxation. So, and I think we're doing that to some degree in Canada now, although we've been pretty careful. The U.S. is doing it to a huge degree now with the new tax cuts that they brought in. They're going to be adding a lot of money to the money supply in the U.S. By spending more in the government, especially in the defense sector and other sectors than they're taking in taxes, because the tax take is dwindling quite rapidly in the U.S. after the new tax cuts.
We'll have more with Hilliard Macbeth right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, the OECD said Canada has to take measures to become more competitive with the U.S., and that means lowering taxes. Do you see any sign of that happening?
Well, it's interesting because the Harper government actually lowered the corporate tax rate to one of the lowest in the OECD. So that statement by the OECD is very recent. It's just since the Trump tax cuts came in that the U.S. has leapfrogged Canada. But before that, Canada was well below the U.S. And I don't know. I mean, did it help us when our corporate tax rate was lower than the U.S. tax rate? I don't really think it did help us that much. So
hundreds of U.S. companies moved their head offices to Canada. Well,
okay, then maybe that did help then. So. We've got lots of problems in Canada with the problem of access to the U.S. market and the trade war that seems to be underway. Although it's not, everybody says it's not an out and out global trade war yet, but it sure seems to be drifting in that direction. Canada has more at stake practically than anybody else, maybe except for Mexico, when it comes to the U.S. And trade. So they may have to look at that, but I think that would be a fourth or fifth item of priority compared to the possibility of tariffs and just access. It's interesting because the U.S. President Trump and the EU had a meeting a few days ago, and they talked about removing barriers, but there was no. I don't think it sounded like it was just a press conference. There was no real decisions. But America has this. The U.S. has this thing called Buy America. So when you're a Alberta or a BC company and you're going to go down there, you're at a real disadvantage because they're supposed to give the business to American companies first. So a lot of companies, like there's a big engineering company in Alberta called PCL, and there's a big consulting company called Stantec. They have to have U.S. subsidiaries that qualify under the Buy America program. But it's kind of scary because most of the big companies in Canada rely on U.S. business, and if the Buy America thing is even tightened up just even a little bit, that could really hurt some Canadian companies. So anyway, when the U.S. president Trump says we'll get rid of all the barriers, he didn't really mean it, because there's no way they're talking about getting rid of Buy America provisions, and therefore the EU would never be willing to get rid of their agricultural subsidies. So there's a lot of talk that goes on, but the political constituents, especially in the agricultural sector, but in some industrial sectors, are so strong that I think we'll find out that this thing could actually get uglier before it gets better, because all of these moves are starting to have repercussions, as the U.S. is starting to find out. The U.S. thought they were earning a bunch of points by starting a trade war with China, and then China retaliated, and now they're scrambling because, of course, China retaliated in the areas where it's going to hurt the president politically the most coming into the November elections, which are not even 100 days away now.
The soybean farmers and so on.
Yeah, the soybean farmers need help to the tune of $12 billion. And, the Brazilian soybean farmers can fill the gap. So it's not like it's guaranteed that the U.S. Farmers are going to be able to continue to export their product. Most industries in the U.S. don't rely on exports very much. There's enough business in the U.S. They don't really need to be international traders. But the agricultural sector is the exception. The soybean farmers export more than 20% of their products, so they really need to be able to sell the soybeans to Japan or China or wherever, all over the world. And there are other countries like Brazil that have farmers that can export. So I don't think it was very well thought through. I suspect it was just mostly for President Trump to appeal to his base. And I remember back, I don't know if people remember this, but I remember back during the election campaign with Hillary Clinton and Donald Trump that Hillary Clinton was talking very much protectionist. She was the mood was very much anti-free trade, and I suspect it still is. So they were responding as we are supposed to do in a democracy. They were responding to the will of the voters. But now that we're starting to see the reaction and the implications of some of these moves, maybe people won't be that happy with some of these anti-free trade moves. But once the war starts and people start shooting, you don't really know where it's. What's that saying? The generals say that no battle plan survives the launching of the first firing of the first gun. So it just takes a life of its own, and we don't know where this thing could go. But getting back to what I was saying about Canada, Canada's got more to lose than practically any other country in the world, because we depend so much on trade. I mentioned less than 10% for most of the U.S. industry, while Canada's more like 40% dependent on international trade. So our economy is very dependent on trade.
We'll have more with Hilliard Macbeth right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, Russia has just sold off most of its U.S. debt. What's the plan there? What do you think's behind it?
That's a really interesting question. I saw that, and I saw the people's reaction, and nobody seems to know what's going on there. I mean, Russia is very dependent on, as I'm sure most of your listeners know, on oil and gas, natural gas to Europe, and oil. They sell oil all over the world. They're one of the biggest oil producers in the world, along with Saudi Arabia and the U.S. Maybe they needed the money, but who knows? Because there's this whole thing with sanctions going on with some of the wealthier people in Russia, like Putin, who's rumored to be one of the wealthiest, if not the wealthiest man in the world. And he's got to put his money somewhere. So say he's worth $100 billion, for example. He's got to invest it in something. And maybe he got worried that the U.S. government would be too easy for them to slap a freeze on his holdings in U.S. government bonds. So but I don't know. I really don't know what was going on there. It was a very unusual, sudden move, and not things like that generally don't happen. That for years people were worried about China and said China could retaliate because China is one of the biggest holders of U.S. treasuries as reserves. So when they sell stuff to the U.S., they get paid in U.S. dollars, and they got the choice of converting it back into the local currency, the renminbi, or leaving it in U.S. dollars. Well, if they convert it back into their local currency, they're just going to push that currency up, and then they're going to be not competitive anymore in their trade. So they leave it in U.S. dollars, and it ends up getting invested in treasuries. And Japan's the other country that owns trillions of dollars of U.S. treasuries. Now, Japan is more of an ally of the U.S., but China's not. So it's these things are these trade threats. I remember reading a few years ago that as long as people are trading and investing with each other, they're more likely not to have any military conflict. But once you start removing some of these trade ties and investment ties, then it makes it much easier to start a shooting war. And so maybe that's part of the thing. If people start unloading their U.S. treasuries, then that might be because they don't want to get caught if things get ugly on the trade war side. And the U.S., the 10-year bond in the U.S., 10-year note it's called, has been flirting with 3% level. A lot of people feel if it goes much above 3%, it could trigger a recession because since the global financial crisis, the U.S. has added a tremendous amount of debt, as has Canada and the private sector and other countries like China's. And so they really don't want rates to rise very much. So that would be one vulnerability the U.S. has is if, of course, if these countries start selling off their U.S. Treasury notes, that'll push interest rates higher. And that could be a bigger retaliation than slapping a tariff on soybeans, for example. You
also said the flattening of the yield curve happening in Canada more than elsewhere?
Canada, the yield curve is flattened. It was down to under 20 basis points. So the normal, there's different ways to measure it, but the most common one is the 2-year rate versus the 10-year rate. And so normally, if you're investing your money for 10 years, you expect to get a higher interest rate than you would if you're investing for 2 years because you're taking more risk by going out to 10 years in the government Canada bond. So when the two get equal or roughly equal or go inverted, where the 2-year rate is higher than the 10-year rate, that's been a very reliable predictor of recessions. And, we've been 9 years since the last recession, so everybody's watching closely to see when the next recession might start. And this has been one of the most reliable predictors. And the reason for it is that the monetary authorities like the Bank of Canada and the U.S. Federal Reserve are usually behind what they call behind the curve. So they're raising rates. They don't realize a recession is just over the horizon because it's actually hard to predict. And so they keep raising the short-term rates, which affects the 2-year rate, pushes it up. The Canadian Bank of Canada rate is now 1.5%, and so that's pushed the 2-year rate up above 2%, or just at 2% roughly. But the 10-year rate is only 2.2%, so it's only slightly higher. And so people start, if people that are big buyers of bonds, and this, it isn't individual people that have any influence on this, it's big players like pension plans and stuff like that. If they start thinking that there's going to be a recession, they're willing to buy the 10-year bond at 2%, even though the 2-year bond rate is 2% as well. And so it's a reliable predictor based on the sentiment of people who invest large pools. I'm talking billions of dollars of pools of money. And of course the monetary authorities, I mean, I don't know if people remember this, but in 2007, Ben Bernanke at the Federal Reserve was still raising rates even after the meltdown, the global financial crisis had started. So the monetary authorities usually are way behind what's really happening on the ground. So that's why it's such a good predictor, and that's why we're watching it closely. And it's very close to inverting. In the U.S., it flirted with the same level roughly as Canada, but now it's widened out again to about 30 basis points. So it hasn't gotten close to inverting. And the predictions, usually it has to invert, and then actually there has to be several months go by before the recession starts. So it isn't like it inverts and then the recession starts in September if it inverted today, for example. If it inverted today, we'd probably be looking at 2019 as the likely time for a recession. But 2019 is probably the likely time for a recession anyway, not because the yield curve is inverting, although I think it probably will before the recession starts, but because what we talked about earlier, which is the slowdown in the lending by the commercial banks, and that is directly tied to the outlook for real estate and the willingness of people to borrow money and the willingness of banks to lend money to buy real estate at the current very expensive levels. So that's what would slow the economy down to the point where there would be a recession. Most likely that would be the reason, unless it was also the other risk is the exports to the U.S., which are, as we talked, we're very dependent on as well.
Hilliard, thank you so much for chatting with us.
Nice to talk to you again, Jim.
My guest has been Hilliard Macbeth, author of the new book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.